What's up guys, it's your boy TinyFX and I'm going to be running you guys through the concepts of order blocks, what order blocks are and how you can apply them in your trading. So what are order blocks? Let's take for instance, you go into the market to go and get yourself some goods. When you go into the market, the first thing you consider, where do people usually buy from? Like where do people go and get the best deals? Because nobody wants to go and get cheated or buy a product that was meant to sell for, let's say, $1, you buy it for $2 or $3. You want to get the best price. Same thing in the market. When you come into the market, you want to buy and sell at the best prices. There's usually this particular store where they have the best prices, good customer support, and all those. So that's probably where you're most likely going to go and get your goods from, because they have good support. You buy at cheap rates and you get the value of your money. Everybody is going to want to buy from that specific zone. And that's exactly where you want to buy, because the more people there, it means the more likely it's going to be a good store, or they're going to sell good products. So in terms of the markets, there are specific price areas where large institutional traders have placed large orders. Large institutions serve as the order buyers, where they've already gone there and they've bought or they've sold for specific areas. Those are the zones you want to buy, those are the zones you want to sell from. Because if the banks are buying from there, you should also be buying from there. So it's basically you trading alongside with the smart money of the market. Those particular areas, they represent key support and resistance zones. Why do order blocks actually matter? I just finished explaining the fact that you buying or selling from another block zone, you're getting good prices. And let's say you are buying at probably a discount and you're selling from premium. So why do they matter? In the markets here, we can use order blocks to get our trend. So is the market going higher? Is the market going to come lower? So on your daily time frame, your daily buyers, you can use order blocks to determine that. You can get your 4-hour buyers from just using order blocks. And then we can use them to get potential zones, the potential areas for trading opportunities. You can get good entries from other block zones. And of course, I'm going to teach you guys how to get that in future videos. But for now, let's just stick to the basics. So I'm sure we all know about support and resistance. We know there are certain points the market goes to and start dropping from that zone. And there are certain zones the market goes to and starts buying. In the market, order blocks can serve as support and resistance. Yeah, I know you've heard of different ways you can use to identify supports, you can use to identify resistance in the market. Order blocks are very good zones to use for support and resistance. So now that we know what order blocks are, we know they are good areas for support and resistance. If you don't know about support and resistance, I'm going to drop a more in-depth video about what support and resistance is. We've learned about the fact that order blocks are good zones you can use for identifying support and resistance areas. When you go into the charts, this level that you want to use, what exactly do they look like? How do they look on the chart? In the market, we have two types of order blocks. We have the bullish order block, which you can also classify as your support order block. And we have the bearish order block, which you can also classify as your resistance order block. When you go into the market, you search for the last bearish candle before an impulsive bullish move. We're going to see examples of that in the future part of this video. But for now, just observe this area I highlighted with a blue zone. We notice the last bearish candle before this impulsive move and we mark it. That's what is classified as a bullish order block. And in future times, when market comes back into that zone, it's more than likely going to go higher. And the opposite is the case for bearish order blocks. The last bullish candle before an impulsive bearish move, that's exactly what we classify as a bearish order block. Going into the charts, what are we going to expect whenever we come checking for order blocks? What do we come to look for and what do we expect? So let's assume we already know about order blocks and we understand that we need to draw order block zones as support and resistance. So we'll take this as a higher time frame support I will take this as a higher time frame resistance. The first thing we want to do, once price has given us a confirmation at either of these zones, it can be by means of a break of market structure, an hourly break of market structure, or a 4-hour break of market structure. So the first thing we want to do, let's assume the market formed the break of market structure at this support over here. Typically, the market should form another block around this region over here. We should have another block. What are we expected to do with that other block that the market created? First thing, immediately after the break of the market structure, we expect the market to come back down and test the other block that was formed here. So after the test of this other block, we are going to anticipate price to go higher and break market structure again. That is this previous higher high. We're going to expect market to break above and then come back to whatsoever other block was formed around this area and break above market structure again. So we're going to continue anticipating these moves until the market eventually reaches the higher time frame order block. So you can see how we are gradually framing our direction just by using order blocks. So then when market comes into the higher time frame resistance, we're going to expect the same move in market structure shift, confirmation that market is changing direction while trading inside that order block on the higher time frame. After market does this, we are still going to expect the same pattern which I just previously explained, but in the opposite direction. We're going to anticipate market to create another block over here and then wait for price to trade back into this other block and then break market structure, continue the circle till it reaches the next order block zone and maybe eventually breaks below and then gives us a new order block zone around here where we can continue trading lower. Let's go over a chart example of what I explained in the previous section of this video. The first thing we want to do is we want to draw out our higher time frame order block zone. We're going to want to draw our resistance, we're going to want to draw our supports depending on where the market is at that point. The first thing we observe is when price came into this order block resistance zone, market created a shift of structure. MSS means market structure shift. So people like to call it break of market structure. Some like to call it market structure shift. Whichever works with you is still fine. Market came and tested our higher time frame order block zone. And after doing that, we notice market shifted structure. What do we expect after this? Every time market shift structure, we want to check prior highs and lows. What happened at the previous high? What happened at the previous low? The chances are going to be that markets created a bullish or a bearish order block. And in this case now, we're looking at this bearish example over here, right after market shifted structure. So the first thing we see, market created another block over here, which could have also been tested. But in this case, market did not test it. This is also a potential order block zone. For those of you that will be wondering, why didn't he mark that zone? Well, that's also another block zone, but in this case, market did not test. So this was the first order block that market created, which happened after this break of market structure. We see after market broke this structure, it created an order block, which is at the previous high of the market. So after creating the order block, what do? We wait. We wait for price to come back into this order block zone. Typically, we can find entries at this zone, but we're going to be talking about that in future videos. So here we can see market tested this zone and dropped. What are we anticipating when price comes back into previous order block zone? We're anticipating market to go in the same direction we are predetermined it to go. We're going to trust our analysis that this market structure shift over here is going to make the market start dropping, which in turn market is going to respect this order block. We see after this break of market structure, price came back into the order block formed and dropped. Price did not come back to this order block, but it continued breaking market structures, which is the most important part. After our market structure shift confirmation, market continues to break structure. The break of market structure is what is going to confirm that we are still going in the predetermined direction. So you can see after the break of market structure, price created another order block, which it went below and later on came back to respect. So we see another one, price broke the market structure and price created another order block, but in this case, price did not come back to retest. Price broke the structure, played around, came and broke structure, created other blocks, broke structure, and then came to test our higher time frame order block zone. So now, when things like this happen, the first thing we want to do is anticipate price to violate this particular high. I'm going to go deeper into this when we're talking about market structure, but for now, I'm just going to be basic about it. So market tested our higher time frame zone and then later on violated our previous zone. I don't classify this as a violation of zone, which I'm going to tell you guys the reason why in future videos, but I don't classify this as a violation of zone. So we see after this market came down and then later on violated these zones over here. It violated this zone. And once market violates or break market structure, what do we start anticipating? We start anticipating market to come back and respect other block zones which were created after the market structure shift. This is the market structure shift over here, and then now this is the other block the market created before this. What do we see next? Market came back into this other block and then shot higher. After shooting higher, market broke structure again. And after breaking structure, we can see this other block which it left behind, and it later came back into and continued going higher until our higher time frame zone was violated. These are the kind of things you want to be checking for whenever you come into the market while trading other blocks. You want to be very robotic about your trading. Whenever you see these criteria I just explained to you, you want to anticipate that price will continue respecting your other block zones until you are proven otherwise. Thank you, and I hope you have a great day ahead. And always remember, go harder and never go home. Have a great day. Peace out.